Hello everyone, this is Juan Galt with Coin Olympics, and I have a very special conversation for you guys today. It's an interview that I did with Chris Horlacher, the CEO of Equibit, which according to him is a open bazaar of securities of sorts, right? And we had a very interesting conversation, and I had the pleasure and opportunity to meet him at Last in Acapulco 2016, where he kind of gave a presentation about how Equibit works and their approach to both compliance as well as privacy and pseudonymity and anonymity and access throughout the whole world to this kind of equities or securities platform. And I found the conversation very interesting. I think that they're taking a very special and sort of strategic, well thought out and serious approach to this problem, and they seem to be building very interesting technology. Okay, they also will be launching their ICO on February the 1st. Now, I don't usually do ICOs or promote cryptocurrencies that are about to do their ICO because, well, I mean, it's a lot easier to do good, impressive looking marketing than it is to deliver production quality, useful software, and especially that meets the decentralized sort of high ambitious standards that the marketing tends to sort of promote. And so I tend to avoid it, but Equibit and this team they really have something special, and I've got sort of been kind of engaging with a good portion of their team without even knowing it for over maybe close to a year and a half now, and I'm very confident that these guys know what they're doing. They're very serious, and they really want to deliver. So I think it's a very interesting platform, very much worth looking into, and if you're interested in checking them out, I got all the links below. But without further ado, Chris Horlacher of Equibit.
Well, in a nutshell, it's basically for the securities industry what Bitcoin is to the banking industry. So Bitcoin pulls out the need for clearinghouses and payment companies like Swift or TPANet or Fedwire, or all these companies or services that are engaged in doing clearing and settlements or money transmissions. So in the securities industry, we have the same problem, and we have companies called depositories and transfer agents that are handling this same work. And so two big ones that maybe your listeners have already heard of, one would be the Delaware Trust and Clearing Corporation, or DTCC. And throughout the rest of the world, a lot of people are familiar with a company called Computershare. And oddly enough, DTCC, I think, clears over 90% of all of the securities transactions in the United States. And so if you're issuing shares to the public or even privately, those shares will go into the custody of a company like this, and they'll be held in something called street name, meaning the transfer agent or the depository is the one who actually owns your stock. You are listed just as a beneficiary or a beneficial owner in book entry format, which is basically just like the way a bank works. So if you have cash, you have cash in your hand, and you're basically owner of that cash. But once you put it into a bank, you aren't the owner of that cash anymore. You are a creditor of the bank. So fundamentally, the same thing happens between you and your stock brokerage or you and your transfer agents. They are the ones who actually own the stock, and you are recorded on their books as a creditor. And this is why throughout the investment industry, we have something very similar to deposit insurance. So in Canada, it's we have the CDIC, which is for banks, and the CIPF, which is for stockholders. And again, it's the same idea. And the reason these exist is because in these industries, we have something called counterparty risk. So the owners, or who ultimately should be the owners of these assets are actually creditors of highly centralized organizations. And of course, if those organizations go under, it's the unsecured creditors, i.e., the account holders, who stand to lose the most when one of these institutions fails. So we saw that with the failure of MF Global or the failure of Bear Stearns. A lot of the account holders, the actually investors who use their services, were the ones who, they didn't get their money back because, again, they're listed as creditors of these institutions, and if they go bankrupt, they're the first ones on the chopping block. So Equibit comes in at this very same layer and replaces the need for the industry to use depositories and transfer agents. So the counterparty risk is gone, and now we have a peer-to-peer network where people can create and trade equity units that we call Equibits, and it's all being done in direct registration format. So if it's at your address, you are the owner, you're the only person who can do anything with that particular security. So direct registration is the most secure way to hold your shares. It basically means that if it was in a certificate, it would be your actual name on the certificate, not the name of your broker or transfer agent, which is typically what winds up happening. So if it's the latter, we call that in the industry street name or indirect registration. So direct is the safest way to go, but it's not the most popular because logistically trading directly registered shares around again and again and again through a secondary market gets very expensive because you're constantly having to cancel and reissue securities. There's often lawyers and accountants involved. And so not a lot of people decide to go that way except at the insistence of the investor themselves. Yeah, you're absolutely right there. We actually began by forking Bitcoin and then started modifying the code from there to better suit the securities industry. So we created tokens that could carry metadata that would represent the actual company and the issuance information. And then we baked in a communication system that allows for things like the order book, proxy designations, private messages, group messages, polling. So all of the things that a company needs to conduct their investor relations. And then to make the institutions happy, we also created a compliance system that the private capital markets would be able to use, and the mainstream industry could adopt this system and still make all of the security regulators happy. So we're really catering to all the investors and all the issuers, the crypto community, and so we wanted to make this for everyone and have a global reach for it. So we're not necessarily looking to release this and only have a North American or Western Hemisphere customer base. We really are hoping that this is picked up as well by developing countries, because of course it makes raising capital for any kind of company in Bitcoin extremely quick and easy and cheap. And so we're hoping that with Bitcoin reaching new heights, we've got I think a $14 billion pool of capital. A lot of Bitcoins aren't being actively traded around. And so to me, that looks like, that's capital that could be invested and mobilized in making jobs and making better products and services for consumers all over the world. And so we wanted Equibit to become sort of that gateway for Bitcoin to reach into the capital markets finally and really come into its own in that way in terms of, helping develop the economy more. Yeah, that's exactly it. So we wanted to create a gateway to make better use
Hmm.
of these bitcoins that are just kind of laying fallow right now, because I think the people who own those bitcoins are they've done very well holding them, certainly, but Bitcoin, I think it still has a long way to go up, but I don't think we're going to see these giant 3, 4, 5,000% or more gains on a year-over-year basis. I think those stupendous kind of gains for Bitcoin are probably now behind us, but investing in startups is a great way to get those kinds of pops. And so, of course, we need a system to do that for these bitcoins to get invested without leaving the cryptocurrency community. And so in order for that to be the case, we needed a cryptocurrency for the securities industry. And so, Equibit is very different from a lot of other altcoins where they want to go and compete against Bitcoin for monetary supremacy. We didn't want to go that route. We had a completely different use case, and so Bitcoin is just one of a number of currencies or cryptocurrencies that we could add into the system. So, we're looking at Litecoin, we're looking at Dash, Monero. There's lots out there that can be ultimately integrated into this system to handle for paying for these things in a trade. And so we have a script called Atomic Cross-Chain Trading. It was developed by Tier Nolan, I think, in 2014. It's a great little script, and it's basically able to create a guaranteed trade across 2 blockchains. So the person with the Bitcoins is guaranteed to get their Equibits, and the person with the Equibits is guaranteed to get their Bitcoins. Otherwise, at any moment along the chain of transactions, one party can back out and unwind the whole thing and guarantee that they either walk away with what they wanted or they're made whole.
Yeah.
And so the great thing about that script is it can work across Bitcoin and Equibit or any other kind of cryptocurrency. So we are looking at a lot of other cryptocurrencies at the moment that we can implement down the line to add more payment methods for the Equibits. Yeah, at any point, I think from the initiation of the trade to 72 hours later, either side can essentially cancel and unwind the whole thing wherever they happen to be along the sequence of transactions. So it's a very safe way to do these trades where both parties don't have to know each other and can guarantee that they walk away whole.
Right, right. And I really like that you're making the compliance side of things opt-in, right? I think that sort of it kind of reflects the way it reflects what Bitcoin is doing to financial markets in general, is making a lot of the sort of heavy regulatory compliance stuff in countries where you don't live and all the cost that incurs, making them opt-in and bringing competition to all these markets is going to be huge.
Yeah.
I
We
also
didn't want to impose Western-style securities regulation on a country that doesn't have that kind of requirements, is not interested in adopting those kinds of requirements, and really to comply with those is it is very expensive. We're bringing the costs down quite a bit with our own system. It's quite a bit more efficient than the current way companies go about doing that. But of course, being a global network, there's there's a lot of countries that if you were issuing stock there, you don't have these things to worry about, and we wouldn't want to force them into that box where they might not be able to then even afford to raise money. So certainly we want to keep the wheels turning in the global capital markets, and where a company has these regulations they need to follow, then they opt in and they can prove to the regulators that they are indeed in compliance to a much higher degree than they can right now. Because in a lot of ways, securities compliance right now, we have something called an accredited investor, and by and large, that mostly works on the honor system. So an investor basically just fills out a checklist and says, here's where I fit in this regulation. So I tick that box, I sign the bottom of the questionnaire, and that's about as far as it goes in this system. So the SEC a couple of years ago recently enacted some additional requirements for issuers in terms of getting them to comply with these regulations. The Ontario or the Canadian regulators look like they're going to start upping the requirements here. And so, this is an area of securities regulation where I think, again, Equibit is, for better or for worse, is going to make a lot of people's lives easier when these more stringent requirements over accredited investors come down.
Yeah. Yeah, and if you can lower the cost, it's going to be a huge deal. I think there's definitely a kind of anarchist element within the whole sort of cryptocurrency space, but I think it's important, like as important as that is, and as much as I support that, I think it's also important to recognize that we need the compliant sort of clear net businesses and the mechanisms for these things to go mainstream. In a sense, what we're trying to build is the way that I'm starting to see it lately is that it's going to, we're building bridges for appropriate kind of compromise between both factions. And then eventually there's going to be some merging, and the people that don't want to play are just going to fall off because they can't compete, right?
Yeah, well, and you see the existing institutions struggling with this right now, and we see this with all of these private blockchains or permissioned blockchains or tokenless blockchains. And so, they see the open and decentralized nature of that, and they don't necessarily understand that paradigm, because their paradigm has been, we're boxed in behind, these high walls in our, in our fortress of solitude where nobody can get in, and we control everything. And so when they encounter something whose entire paradigm is completely upside down, it seems like their first instinct is to make it more familiar. But in doing so, they destroy the entire value proposition of the technology. So blockchain isn't, it's just a database. It's no better than any of the other databases that are around, except for one thing. And that is, it can be maintained in a completely decentralized manner. You can't do that in any of the current database technology. And so by privatizing the blockchain and the infrastructure, you're just taking on all of the cost of building out all of the computing resources and securing all of that all over again. And the whole point of blockchain technology is that you can set up a database and not have to make those investments. So of course, again, going back to the sort of the whole security paradigm, the compliance paradigm has been the same way. Control all the doors in and out of the system, and then you can make sure people comply. So our system is I think, striking the right balance between being open, but also making sure that the players that need to play by these rules can do so and still also reap the benefits of a decentralized network.
Right. Now, at the heart of that conflict, right, where it's sort of the high compliance sort of side of things, and the more sort of people that want to stay out of the matrix, let's say, there is that question of privacy, and how do you deal with the question of privacy when it comes to finance in this space?
So people on a blockchain are as private as they want to be. If they never want to reveal their personal identity to anybody, they don't have to. That could come with some consequences. There could be some companies who want to comply. You won't be able to come into ownership of their shares. So that's That's sort of the trade-off. But the companies that, let's say they're in a jurisdiction where they don't have these kinds of laws, then they would just always be issuing everything to the public, and then those shares can circulate all over Equibit, and anybody can take them.
Excellent.
So really the only time where you would have to reveal your identity to anyone is when you want to get something called a trading passport. And so a trading passport is the component of our compliance system that will then expose you to the group of issuers that are also connected to the place where you bought that trading passport from. So in securities law, you always have to put out your identity if you're buying private shares. Now, traditionally, you put your identity out to the issuing company. But what has recently been changing, starting in 2014, was that the SEC now allows for independent third parties to do that work of verifying accredited investors and holding onto that identity information. So this is much better for investors concerned with privacy, because now I don't have to reveal my identity to every single private issuer that I want to buy the shares from. I only have to reveal my identity to one accrediting body, who will then vouch for me to all of those private issuers and say, hey, guys, we've done the work on this person. They checked out, they're fine. You can give them the shares. So in terms of privacy, this helps out the investors immensely, because now they only reveal their identity to one organization that ostensibly is going to be bound very tightly by privacy legislation. And they don't have to worry about their identity spilling out into all of the issuing companies that they have ever owned shares of.
Right. And when it comes to other blockchains, you said that you can connect Equibit to things like Dash or Monero, probably Zcash as well. I'm assuming that you need blockchains that can interact with this sort of lock time verify sort of logic, right, to do the atomic trading, or is there any other ways that you like? Are there any ways?
Lock time is a key component in making that cross-chain trade work. Otherwise, the trigger that you can pull to back out of the trade doesn't work. So we wouldn't be able to necessarily integrate with blockchains that don't include that kind of a feature.
Right.
So we'll have to look at them on a case-by-case basis and say, can we make this trading work with this blockchain? And then, if yes, we can add it in. If not, then, unfortunately, we have to move on.
Right. Yeah, and to my knowledge, this is the best tool that we've come up with so far to do cross-blockchain transactions in a peer-to-peer way. So
we were originally thinking about a smart contract that would put it in escrow, and then to unlock it, or to finish the trade, it wouldn't deliver the Equibits until a Bitcoin transaction had occurred. And we had that created, but when we came across the atomic trading, it was just so much better, because you didn't need a smart contract. It was just as safe, because if you can guarantee you're getting what you bargained for, then what's the use of an escrow agent?
Right. Okay. But there's other options then, right? So you can.
This was just the most flexible one we saw, because of course with the smart contract, we would have to reprogram the smart contract every time we wanted to add a new currency into the mix.
Right. Yeah. Yes, that's really interesting. And okay, and so users could potentially, if let's say that, will Equibits have, for example, Forex pairs, right? Like, will you have sort of Forex tokens like a few other cryptocurrencies have done, or what kind of applications or features will users be able to access through Equibit software?
Well, if you're running a full node, you can do basically anything you want. You can mine the network, you can issue trading passports, you can run a communications hub, you can build your own web wallet and build a revenue model around that. So that's what we've done as EDC. So after we release the Equibit software, we'll be launching a web wallet program, And that's going to look a lot like an online discount broker. So you'll have the currencies that you're holding. So you'll see your Bitcoins and your blank Equibits. And then you'll see all of the authorized Equibits that have come from issuers that have added that metadata component to the token. And of course, you can collect dividends in Bitcoin through the same way, because of course, it's very easy to tell where all of your issued Equibits are, what addresses they're located at, and then you can very quickly and easily find out what the corresponding Bitcoin payment address is, and you can issue out a dividend very quickly and very easily. You can also send a message to all of those addresses if you're sending the notice for the next annual meeting of shareholders, MD&As, and really anything, shareholder polls. It even handles the proxies assignment process. So if you're handling a vote, investors can designate different people who can speak on their behalf. So in a lot of times when shares are owned in a fund, for example, a lot of the fund holders will designate the fund manager as their proxy to vote on their behalf. Other people in smaller, closely held companies, they designate the CEO. So there's lots of different instances where that needs to occur. Incidentally, a company called Broadridge just purchased a blockchain proxy assignment system from another company called InvaShare for $135 million.
Wow.
So there's big interest in systems that can do these things at the moment, as evidenced by that, or companies like R3 or Digital Asset Holdings. So the securities industry is looking for these kinds of solutions, and we've had meetings with a number of companies out there already, including other transfer agents, banks, and even the Ontario Securities Commission. We were there a couple of weeks ago.
Awesome. So you guys are ready to, you're moving further along in this process, and you're about to start your ICO, which is going to be there's going to be a portion of the tokens. I believe, is it the Equibit tokens for the Equibit blockchain? Is that
Yes.
Okay?
Yeah. So the Equibit blockchain, when it matures, will have 22 million Equibits on it. So the way this works is, in the Genesis block, 1 million Equibits will come out, and that's what we're putting up in the ICO. And then it follows the same issuance pattern as Bitcoin, so 50 per block, halving every 210,000 blocks to add an additional 21 million. So the first million will be put up for sale, and that will open up on our site on February 1st. We plan to run it till the end of March. And then, if they're all bought up before then, we close early. So that will get the company funded. We'll have more than enough at that point to, take the project to completion. We have an alpha version of Equibit built right now, running on a few nodes. We've even built something very special called a super node, which we've done press releases about and I've spoken about in other interviews. So your audience can look that up. But this is a highly, highly secure cryptocurrency node and place to put private keys. So EDC will be positioning ourselves, post launch as essentially a private key management company and an institutional cryptocurrency infrastructure company with the supernode and the web wallet service. So we're really focused on the security over private keys and making cryptocurrencies as secure and easy to use as possible for the retail customer.
Fantastic. I really like the approach that you're taking. I really like that it seems like you're talking to the needs of all kinds of customers, and I imagine it's going to do very well. Would you expect that, let's say if a big sort of financial corporation says, hey, we want to buy Equibits, is that a possibility? Would they be sort of buying out the initial sort of ICO investors, or would they be buying other sort of tokens that have not been released to the markets yet?
Well, the only tokens that EDC will control would be the ones we mine ourselves. So there's the million that will go out in the ICO, and then we'll be running our own mining operation because brand new blockchain. We've got to protect it to make sure that a 51% attack doesn't come along and wipe us out. So we're reaching out to the mining community now and talking to people. And the ICO is a good way of getting that out as well. So if we do have a successful ICO, then that will get the attention of the miners. They'll see the value in the coin and hopefully start mining it.
Have you heard of Komodo and the Supernet?
I have heard of Komodo. I haven't, to be honest, I haven't looked that deeply into it.
Right.
We're extremely busy right now getting ready for the ICO.
Yeah, let me tell you a little bit about them because I think they might actually help you lower the costs of getting miners to actually mine Equibit. Basically, and full disclosure, I'm running to be a delegate of Komodo, and what that means is that I'm responsible for running this kind of supernode that hosts a bunch of different blockchains, including the Komodo blockchain, and it could run the Equibit blockchain as well. And then this sort of set of nodes, about 64 of them, every 10 minutes, they grab a hash of the given blockchains and then they post it on the Bitcoin blockchain, right? They submit it in a sort of special transaction to the Bitcoin blockchain and they back up basically other altcoin blockchains on top of Bitcoin so that if a 51% attack does sort of wipe out your altcoin, you can restore from Bitcoin's backup, right? And then that way you don't have to go and beg miners to merge mine your blockchain, for example, right? You can just sort of write it on top. And that's sort of a project that's sort of launching right now. And it's very much in the same lines of what you're doing. So I imagine there's probably a lot of sort of potential for collaboration there. And the community that I speak to will probably be very interested in what you're doing as well. So.
Oh, that's great. I'll definitely take a look at that then. Thanks.
Yeah, you're welcome. I had an interview at the crypto show where I sort of got into more detail about that. So you're welcome to check that out. And yeah, anybody else that's listening to it, you can check that out as well. Yeah, that's fantastic. Do you want to talk a little bit about scalability? How have you guys approached this problem? Because I imagine, you're going to have to deal with it at some point, right?
Yeah, well, so right off the bat, we're going to be launching Equibit with its own version of segregated witnesses. And so the miners will have the option of storing the complete blockchain or just the transactional inputs and outputs. And so we're splitting, I'm probably not the best person to be describing this because I'm the accountant, I'm not that technical, but we're splitting it into, I think it's two Merkle roots, and one root contains all of the inputs and outputs, and the other one has all of the signature data. And so people will have the option of carrying one or both of these chains. And in terms of the chain containing all of the signature data, they can even choose how much history they want to keep. So the transaction inputs and outputs are a very small component of the overall blockchain. I think maybe about less than 1/10 of the size of the complete thing. The signature data is really heavy. And so if I'm running a node and I only want to keep the input-output data, just so that I'm running my node and I can be certain I can validate all of my transactions and do the job I need to do as a miner, and just ignore the signature data, you can do that and it will run very light and very fast. You can fit a lot more transactions in each block. Now, the signature data, if I want to run, like a fat node and carry all of the signature data, I can choose to carry all of it from the beginning of time. I can carry, 1 year, 3 year, 5 year, 7 year audit trail. We're making it flexible so miners can carry, as either the minimum amount of data or all of it.
Excellent. That's awesome. What about the blocks? Like, how big are the blocks, or how do you deal with block size? And do you have any metrics right now as far as the transactions per block that it can handle?
Well, we're still we're still considering block size, and so this is something we'll figure out, through the course of our testing procedures, how big we want that block to be. Of course, right now it's set at 1 megabyte because that's where Bitcoin was, but we're considering 2 and 4 megabyte blocks. We're also looking at some of these new technologies that are coming up to scale as well. And so just recently, I think in December, a day after we published our white paper in ArcSiv, another group published the day after, December 22nd, they published a paper in ArcSiv about an add-on to the Bitcoin protocol, which it makes use of some specialized Intel hardware, but that would scale the Bitcoin blockchain up to about 2,500 transactions per second. And they claim to have achieved this in the testing that they've done. So that's very interesting. And so since it works on Bitcoin, it would also work on Equibit. The only requirement is that you have these new Intel chips. So, if you bought your computer and it's got an Intel processor in it anytime after, I think 2015, you've got this special, subroutine in your CPU somewhere that they leverage in order to reach these new speeds. And that would require, no additional modifications to the Bitcoin code. So we're looking at that. I think just increasing the block size it seems to me a bit more like a handling doing surgery with a blunt object. And there's a very real and there's a very good criticism against increasing the block size above certain sizes, because again, the internet, we enjoy very fast internet over here, but not necessarily the rest of the world. And so if you have big fat blocks, it takes them a long time to propagate into these other regions once they're discovered. Right. So, if there's ways of increasing the transactions per second without necessarily increasing the block size, I think those are probably, a better, more secure way of scaling the system.
Yeah, that's a good point. Awesome. Is there anything else that you want to maybe mention or talk about? Check us out. Our website is equibit.org. That's spelled EQUIBIT. We've got links to the white paper and the ICO terms and conditions. So again, opening February 1st, and we'll keep posting more information onto the website as we get closer to the day. Great. I'll put some links below and put the link, the name over the screen here. Thank you so much for being with us, Chris. I think it's a fascinating project, and it's definitely the kind of thing that Bitcoin needs, because, we look at big exchanges like Poloniex, which I love. I really love their service. I think they're doing a fantastic job. But they're so big that, you got to wonder at what point they're going to get hit. And there's always a little bit of nervousness when I log into Poloniex. And I think a lot of people sort of experience this. And so we definitely need to decentralize this as much as we can. And the projects like this one, from what I've studied the past 3-4 years about decentralized exchanges, is the way to go. That this is the path that seems to be available. So yeah, it's sort of like the open bazaar for securities. Right. Let me ask you one more question. Where are you in the development process? What would you say, if you had your magic prediction, 8-ball? When would this technology be available to the public in production quality, or where are we as far as that goes? Well, if the ICO goes, the way we're all hoping it does, then we should be ready to publish our GitHub repo on or before May 31st of 2017. So I mentioned we have an alpha of Equibit running on a couple of our own internal nodes right now, testing. We have a few additional modifications that we know we need to make. So that's about maybe a month's worth of work in there. Of course, we need to test that when we're done. And then, so, it takes as long to debug something as it does to build it in the first place. So we really want to make sure we release something that is bug-free, and people don't have to necessarily worry about
someone taking advantage of the system and making it do naughty things.
Mm-hmm.
So yeah, so I think probably 2 months after we close the ICO, that's when we'll be publishing the GitHub repo. Of course, if we're comfortable with the software before then, we want to get it out as soon as possible. We don't want to keep people waiting any longer than we need to, because we know, there's other companies out there that are trying to solve the same problems. And we think we have a really good solution here, and we've got a lot of a pretty big head start on the competitors. But of course, we want to move quickly and get this in everybody's hands as fast as we can.
Absolutely, that's fantastic. All right, well, thank you so much, and I'm looking forward to Equibit's launching, and we'll talk again. I think there's a lot of stuff we can talk about it, and have some really good conversations.
Look forward to it. Thanks, Juan.
Awesome. Cheers.